Good afternoon, everyone, and welcome to the webinar on Payday Super, preparing your business for 1 July. The webinar will run for about 20 minutes, and we'll have question time for about another 10 or 15 minutes at the end. The session is being recorded and will be available on our website shortly. I'm George Alianis, and I'm the head of the Project Management Office at First Super. First, let me begin by acknowledging the traditional custodians of the land on which we meet, and by paying respect to the elders past, present, and emerging. I also extend that respect to Aboriginal and Torres Strait Islander people attending this event. And thank you for joining me this afternoon. I encourage you to ask any questions using the Q&A button at the bottom of your Zoom screen. Questions are anonymous, and I'll do my best to answer them at the end of the webinar. The presentation has been prepared by First Super and may not be used or produced without prior written consent from the trustee. The information in the presentation is accurate as of today's date, which is Wednesday, 22nd of April, 2026. Okay, so now that we've got that out the way, and we'll just start diving. We're going to be talking about Payday Super, what's changing from 1 July, what it means for employers, and practical steps that you can start to do to prepare now. So what exactly is Payday Super? It's basically a legislative change that was kicked off in 2023-2024 budget to address the underpayment of superannuation to employees. And the reason this was done was basically in the order of $4.7 billion of unpaid super a year. The key benefits is to drive industry compliance and transparency, drive better outcome for employees and their retirement balances, and to encourage payroll practices. So what actually is changing then? Well, the first thing is that super is moving from quarterly payments to payday payments. Now, quarterly payments used to be 28 days after the end of the quarter, so you essentially could be doing 4 payments in a year. Some employers would be paying more frequently, either monthly or every couple of weeks, etc., but that was up to the employer's discretion. With the new legislative change, you need to make that payment within 7 days of the pay day having occurred. So basically, people generally talk about it as being at the same time as salary and wages. The important thing out of this from the employer perspective is that these contributions need to reach the employee's super fund within 7 business days of payday. Now, why that 7 business days is important is it's not that you've paid it and it will get to the fund. It needs to be received by the fund. So you need to allow things, for example, like whether you're going through a clearinghouse system or delays in banking and things like that. We'll talk a bit more in detail, but you have 7 business days for the fund to have received it. Another big change with this legislation is the government is closing down this ATO's small business clearinghouse. So if you are using this as a way to pay your contributions to your employees, you can do it up to 30 June. After that, it's gone. That also means that if there's any information that you need to keep for reporting purposes, you need to get in there now, download it, because from 1 July onwards, it's not available to either submit contributions or to download any historic information as well. The ATO is also placing in a lot more monitoring. It uses information from the super funds in the form of maths reporting, gets information from the employers in terms of single touch payroll, and has got some smarts behind that it allows better monitoring of contributions. Have they been received? Who isn't making them? And things like that. Probably the single biggest takeaway from an employer is you need to be paying your super as close to paying the wages as possible, and the penalty regime behind it has changed as well. So if you start to think about the employer impact, I mean, there's numerous parties that are impacted because of Payday Super. The payroll systems are impacted, clearinghouses are impacted, the gateways that allow SuperStream messages to flow between funds and employers have been impacted, and naturally the employer. The employer probably cops a fair bit of additional obligations because the penalties are all linked to them. So what does that actually mean for your business? Your payroll, your finance, and the super processes that link all that together need to work in a much tighter cycle. So for example, if it's going to take you a couple of days to receive finance approval to make the payment, you've lost a couple of days out of that 7 business day cycle to make sure the money goes from your company through to the super fund. It could also impact the cash flow due to increased frequency of payments. And probably the most noticeable of this will be round about this transition from 30 June to 1 July, from the old regime to the new regime, where according to the old regime, you still have up to 28th of July to make the June quarter payments. But yet, if you are, for example, doing weekly or bi-weekly payments in the new regime, you could have an obligation that is due before your June cons even need to be paid. If you are currently using a lot of manual processes to deal with super, so for example, you'll receive paper-based forms from your employees, you enter into the payroll system, you may follow up with a member to check with the employee to check what their member details are, etc. All that chasing someone around, following up, manually keying stuff in, eats away at that 7 business days. If there's any error, for example, and you now need to follow up from someone, the sorry, I just lost my train of thought 1 second there. If you need to follow up with a member or an employee because their contribution has been rejected and you need new information, you'll need to follow up with them. Again, you want to try and automate this way that you interact with them. You want to automate the way that you get information back from funds or from your clearinghouse or into your payroll system so you can fix errors and deal with these rejected contributions. If a contribution has been rejected, so in other words, let's say you pay on the Monday and your 7 business days starts ticking off. If your contribution is rejected, you need to resubmit a contribution before that 7 business days is elapsed. Otherwise, you will be in breach of your obligations. So 7 business days is including the time to make a repayment or a second attempt at a payment. The only time this changes is if you are dealing with someone who's a brand new starter, you have 20 days to do that instead of the 7 business days. Similarly, if somebody has changed fund, you also get 20 days instead of 7 business days. Probably the biggest thing around this is generally within the industry, there's concern around how many employees are fully across this and have got enough awareness around what they need to do. The idea behind all of this, I guess, is look at your processes and see how you're going to be dealing with them, because any manual delays are essentially going to kill you. So if we start to look at what you need to do, it comes down to 2 major categories. It comes down to the systems that are being used and then the people and processes. So if we start to look at systems and timing, take a look at when you run your payroll, look at when you get approvals, for example, from finance to be able to make payments, and also what your bank cutoff times are. So that if, for example, you're wanting to pay on that Monday, that you haven't missed a bank cutoff time, you submit it at 9 o'clock and the bank's not going to process it until the Tuesday, which means you've lost an additional day. The best way to do this is contact your clearinghouse, or your clearinghouse provider, or your payroll software, and understand how long does it take for the money and data to get through to the funds from the time you've sent it. So, for example, you might have sent it on the Monday, but if you paid by direct debit, for example, there could be an additional 3 days before that money and data is sent onto a fund. Understand how your payroll software and clearinghouse are going to handle exceptions and rejections. So historically, sometimes a fund would return an error message to a clearinghouse, but the employer wasn't really aware they need to log into the clearinghouse to look at that exception message. Some of the payroll software now is improving the way error messages are being sent back. One of the big changes within SuperStream has been what's called enhanced error messaging. So now the errors are more consistent. So if you're getting a message from 3 different funds for the same type of error, the message is the same versus an interpretation of what each fund would have told the employer. You also need to understand any changes to how you calculate SG. So typically, what I'm referring to there is what's termed qualifiable earnings. Most of your payroll software will already be dealing with or would be dealing with this by 30 June. If in doubt, reach out to your payroll provider, double check that they are implementing that, the version of software you're on is calculating that information correctly. If we consider the people and processes side of things, you are essentially wanting to understand what are all the manual steps you're doing and how do you get rid of those. So, for example, if you've got an employee who's joining for the first time, how do you streamline the gathering of data from them? Whether it's around bank account details so you can make your payments for wages, with collecting the super fund details, TFNs. There are a lot of employer onboarding tools available today. Some are provided by payroll software, some are standalone, but typically these things start to collect the information from the employee as soon as they've signed their contract, which kind of speeds up that whole data collection process so that when they're starting, you've got almost everything you need to go and you are not delayed by that. Similarly, if you're doing a change of fund process, there are solutions out there that allow the employee to manage these changes themselves. So basically, you just point to the site, they will make those updates, and it feeds through to your payroll system without you needing to actually go process manual paper-based forms, double check what's going on, etc. Make sure that your payroll and finance teams understand the new timeframes and the importance of not delaying on approvals and things like that. Also understand the change to the new SG penalties. So under the ATO's got a very nice web page that describes the four new penalties, how they work, etc. And basically comes down to the regular things of you need to pay the money that wasn't paid, you need to pay the interest that was lost until that catch up is made. There's an optional fine that comes into it as well, and there's a fine if you haven't been doing the right choice of fund stuff. Um, A new feature of SuperStream that's been brought in because of Payday Super as well is a thing called the MVR messages. So it's a member verification request message. So this allows you as an employer to send a message to a fund, and typically it's done through the payroll system or through your clearinghouse software. You'll send a message to the fund saying, I've got Susie Doe with this date of birth, this TFN, etc. Will you accept a contribution on her behalf? The fund will then, within 24 hours, as legislated, respond back to you saying, yes, I will, or no, I won't, and there's five possible reasons. For example, the person's left the fund, um, they they've left the fund, we never had an account with them, our fund doesn't accept contributions at all, things like that. So this MVR message essentially is a way to give you an extra bit of comfort that when you're setting up a new employee, or when somebody's changed fund details, i.e. paying to a new fund, you're able to send this message and get comfort that it should be processed. You cannot use this message for every single contribution, though. So in other words, this can't be used every time you want to make a payment off to a different fund, say, for example, on a monthly basis or every 2 weeks. The only times you can use it is when somebody's changed details in your system, for example, a change of last name, things like that. They provided a TFN, so you might need to validate that. They've joined your fund they've joined a new fund, or they've joined you as a new employee. So we kind of talked a bit about some of the areas or some of the material so far. I think what we're going to do now is kind of just do a bit of a quick deep dive into what are the active steps you need to do to start to get yourself ready. First thing is probably just understand what your end-to-end super process looks like. That doesn't mean you need to hire someone to do a whole process flow. Somebody could be a bunch of boxes. Payroll team does this, finance team does this, member does this. Just understand what that looks like. Look for areas of possible delay, or look for areas where you know that you might be taking longer than you should be taking. Once you've mapped that out, just add below that the number of days each of these steps typically takes, and make sure that that fits within the 7 business days that you've got. Within that process, also look at the external dependencies. So, for example, when it's a clearinghouse, how many days does it take for them to send it on to the fund? For your bank, for the money to clear as well, how many days does that clear? What payment method are you using? So, for example, if you're using an EFT or if you're using BPay, typically those are next day. If you're using NPP, it's same day clearance of money. If you're using direct debit, typically there's a 3-day delay before the funds are seen as cleared and will be processed. So even just choosing your payment channel in that end-to-end process mapping will impact how quickly you're able to make sure that the money is moved from you as the employer through to the fund. Next one would be looking at your provider's Payday Super capabilities and timing. Now, When we're saying your providers, this is both your payroll system as well as your clearinghouse, if you've got a separate clearinghouse. Some payroll systems already have integration with their own clearinghouse or with a third-party clearinghouse, so that becomes invisible to you. Other ones, you'll run your payroll software, run an extract, you'll load this file into a clearinghouse system and make it process. So make sure that both your payroll software is doing the right thing, calculating QE and things like that as well, and your clearinghouse, whether it's integrated or a standalone one, is able to support your new functionality. We started talking a little bit about the payment methods and cutoff times and contingency plans. The contingency plans are probably the important one. So what do you do if something goes wrong? So for example, you may have normally made a payment in a certain channel. If that didn't work, how do you now make a payment using, for example, a BPay instead of an EFT or something like that? For example, maybe the finance person who would normally provide dual authorization to make a payment effective, if they are not there, what's that going to look like? In the past, probably is only critical 4 times a year because they're 28 days off the end of quarter. Because of the frequency now, if you're doing it every couple of weeks, you're going to need to worry about that more frequently. So basically just plan. And I think realistically, the biggest thing is just around who are your finance approvers, and if they're not available, who's their backup or what is the backup process to make sure the money can flow. Talked about new starters and change of fund workflows. Just going to beat this one a bit to death. If you are making regular super payments for a employee, you've got 7 business days, and that should be as automated as possible. Okay, so you shouldn't be having to do any manual steps, do manual calculations and things like that. You'd be wanting your payroll system to do all the calculations of QE plus any super obligations, etc., and have that flow through, whether it's through a file to your clearinghouse. You've got 7 business days. For a new starter, try and get them to give you all the information through an employee onboarding tool to make it simpler. And so you're not needing to nag them or chase them up. Similarly, for change of fund workflows, try and use an automated tool where they can go make the change and it feeds into your payroll system so you're not having to chase someone for this. Also work out how you're going to manage, they've given you a change of fund details, but the details are incorrect and something bounces back. How do you manage that? And again, this comes back to, yes, you can chase the person, but if they haven't given you, you've got the same problem like you do today, where if you want to meet your end of quarter obligation, you might have to put them into the default fund. In this case, all we've done is accelerated the time frame. So if they are not getting information back to you, you may need to put them into the default fund as one of your options. Not necessarily the best outcome for the employee because they may now need to go close down another fund and things like that as well, but it allows you to meet your obligations. So try and streamline the way you're communicating with the employees to eliminate the opportunity for that. Your new starters and your change of fund ones, do you have the 20 days, 20 business days to make that happen versus the 7 days for the regular cons? Now, with all of this happening, of course, the ATO has been doing a lot of work to provide information around what the employer obligations are. One of the things I've got is they do have a very nice employer checklist, which is available on their website. I'll show you what that looks like in a second. Contact your clearinghouse, whether it's a separate one or your payroll provider if it's integrated, just to understand what their timeframes look like. And also look at any of your software providers implementation updates. If there's any more config you need to do yourself, if you are on the correct version to support Payday Super. On the ATO website, they've got a wealth of information. They have a whole section on Payday Super. So if you just go to this website, search for Payday Super, it provides lots of information around what the obligations are, how you need to do it. The thing I like the most is their checklist for employers, where it kind of walks through step by step what you need to do. It also covers off sections like what to do with the cutover from the old to the new system of payment. And I'll kind of just gloss over it very quickly. What the process looks like there is you still have your 30 June quarter or your June quarter SG payments to be made, and you've got your Payday Super ones coming up. The first contribution that is received after 1 July is still seen as being applying to your old regime, in other words, to your June quarter, and your new ones will be seen as the Payday Super one. However, if you are, for example, paying every week, it could be possible that your obligations for Payday Super kick in before any penalties would kick in for the 28th of July date. So we recommend you kind of look at their page. They give some worked examples of how you can manage around that, but also kind of just be aware that you may need to have extra cash flow to deal with that. At this point, I think we'll throw to the floor, look for some questions, and hopefully we can answer all the ones you throw at me. Okay, first question. Can you link the First Super clearinghouse to MyOB? No, you can't. So First Super does offer a clearinghouse solution through SuperChoice. MyOB has their own solution. So if you are using the solution through MyOB, you'll be using their implementation that they've got as a clearinghouse backend. If you want to use that, that's great. It'll do the exact same job. It'll still package up the contributions with the appropriate data and the payment, send it off, and as a fund, whether it's First Super or any other fund, we will get the information. Similarly, if you end up using SuperChoice's clearinghouse solution that we offer, it'll work exactly the same way. So it doesn't matter which clearinghouse you use, or they will both do the same technical function of packaging all the data up, but you can't link First Super's clearinghouse into the MyOB solution. The next question. We're using MyOB to do SuperStream. We noticed the Super was not confirmed within 7 days. Money had gone from our account. If the funds are not received by the relevant fund, do we get a fine as this is out of our control? The bad news is, yes, you would get a fine. So basically, it falls onto the employer as the employer's responsibility to make sure that it reaches the fund within 7 business days. So going back to the earlier part of the slide, we talked about understanding what the flow looks like in terms of your processes, what the timeline looks like from your different providers. That's kind of crucial. So in this case, trying to think of the best way that you could approach this. Probably reach out to MyOB first, understand what their timeline looks like. So if, for example, I'm paying on a Monday or Tuesday, how many business days is it before the information is sent? They should be able to provide you that information. It's deemed as being received by the fund when the fund gets the money and the data. So from your perspective, as long as you can understand how long it's taken for MyOB to package the data up, send it to the clearinghouse. Along with that, probably the flow of money. So I'm not sure how the money is coming from MyOB, whether it's being done as you are making an EFT payment, which could speed things up, or if MyOB is doing a direct debit from your account, which may be adding an extra 3-day delay. In terms of the confirming the contribution is allocated, a quirk of SuperStream is it doesn't really allow you to know that it has been allocated. A super fund under the new legislation is required to allocate the contributions within 3 days or return them. So what this means is that if you don't hear anything, it's probably been allocated. But if you hear something back within 3 days, it hasn't been allocated. So essentially, if you kick it off on day 1, contributions get through by, say, day 4, day 5, whatever it is. If you and then the fund takes an extra couple of days to allocate it. If that is back within the 7 business days, and you've noticed there's an error, you can then resubmit the contribution with the correction. And typically that'll be coming back to some form of error message where there either was information, or maybe the member number was wrong or things like that. Probably also worth working with your current set of errors you're getting from funds, understanding the type of error messages you're getting, so you can do a bit of a data cleanup. So for example, if you are getting rejected contributions today because there's not sufficient member details or name is incorrect or things like that, if you work with your funds now to clean up that information, it should also decrease the number of errors you could potentially get. Next question. Why would a contribution be rejected? When a fund receives it, they basically are going to look for a couple of things. Can I identify the member that this contribution needs to be allocated to? And is a contribution of a type that I can allocate? So the first thing is, do you have things like the first name, the last name, the date of birth, the TFN, all the typical data fields that you would need to be able to match a employee to the record that is held by the super fund? Oh, excuse me. Sorry about that. Um, the next thing is the type of contributions that has been received. In other words, if I'm sending through, I'll make that up, a voluntary contribution that requires a TFN, the fund doesn't have a TFN, it'll be rejected. And you'll be applying within the world of your employer cons, but that's the type of thing. So with the enhanced error messaging, it is much more specific in terms of what's coming back to you. So you should get a much clearer picture of what's going on. But the bulk of the errors are because the member can't be identified successfully at the fund. Typically because the account number's been provided incorrect. There's been a name change. Someone got married, for example, and the married name is in your system, but yet their maiden name is in the super funds system. Next question. If I change clearinghouse, can I still access First Super's clearinghouse for historical data if needed? Short answer is yes. Um, you need to contact us, and we'd kind of make sure that the access to the system is still available so your account isn't shut down. But yes, you would still be able to do that. You could also still download the report information and keep that in your own system so you wouldn't need to access the system. So you've got two options there. Um, okay, there's a question here which is a bit more complex. Um, and I'll read out the question first and we'll deep dive after that. So what if a super fund is merging or changing and there's a reduced access period where the employer is unable to make contributions on behalf of an employee until the merger is complete? How does this work for a 7-day rule? The reason this is complex is there isn't a very clear answer at this point in time. So we're going to need to get back to you on this one. It's a very important question. Um, At the moment, the way the ATO has been talking to the industry, they don't really want periods where the funds go for a large shutdown, and an employee needs to settle contributions for multiple weeks before something can be sent, etc. Also, typically what happens is when the funds start to process, there may be a bit of a catch-up period where they're not processing as with the same timeliness they would have before. So that question is really great. Don't know the answer right now, but wanted to call it out because that's something we will get back to you guys with a response on, because again, it's something that's not within your control, but you need to know what's going to be happening with it. Um, okay, next question is, how do we add other super funds into First Super's clearinghouse? Normally, when you go to when you log into the Super Choice system, you'll be able to add a member. Once you've added a member, there's an option where you can then select which fund you want to link them to. If you are already a user of the system and you can basically just search for that. If you've registered recently, it is possible that that capability needs to be turned on. If you are seeing that you do not have the ability to link a new fund other than First Super, in other words, First Super is the only fund you're seeing, please contact our call center and they will then be able to modify the permission, which allows you to add other funds. Um, So effectively, do we continue to process as normal, just pay super in line with our pay dates? I'm going to say most likely yes, as long as you know from an employer perspective that the time it takes from when you kick it off to the time the fund gets it is 7 days. So I'll make up a bizarre example. Let's say that you used a clearinghouse solution that sat on data and money for 2 weeks before passing it on. Even though you're doing what you normally would do, in that case, you'd be in breach because it's taken more than 7 business days. So if you're using a system that is not adding weird and wonderful delays, etc., then what you're doing would work and everything would just carry on. Make sure that obviously you work out the right QE calculations, etc. And yeah, that's pretty much about it. So it should work. Just double check that the timing is not going to be off and make sure that you have calculated the QE correctly in your payroll system so that you're not short paying anyone. Um, see if there's any other questions here. Okay, question here. With June's payment being processed in July and then the change to Payday Super, employees may have the equivalent of 13 months of super processed in 2026-27, adding to the 30K cap. How can we report this? That's an awesome one. So there's two times when you essentially could be having additional payments going in, which could lead to a breach of the 30K cont cap. The good news is, as an employer, it is not your problem. It's basically it's the duty of the employee to be monitoring this, and if necessary, get an exemption letter from the ATO provided to you so that they can or get the letters from the ATO saying yes, the employer is now not required to pay the super. They can give that to you. If it does turn out that that you've exceeded the cont cap, ATO will contact the member, and then the member or the employee can decide whether they want to be paid out or pay additional tax or things like that, or use it against one of the other contribution caps. Um, there is legislation that is being drafted at the moment by Treasury that will deal with the gap when we go from 20 or next June, July. For this June, July, though, there actually isn't anything that's currently in place. So no one's quite sure what's going to happen and whether Treasury is going to add something as well to that. But the, from what I understand, the legislation that's being proposed for the end of the next year, i.e., June 2027, July 2028. Sorry, June? Yeah, next year. There is going to be some leeway given to cater for that. But for this year, yeah, nothing explicitly has been provided as of yet. As we learn more as well, we'll be updating our own website. Just go back to that. There's a heap of information that we've posted up on the First Super website. If you go to our Payday Super Hub, we'll be able to provide, or you can read through all the FAQ information that we've got there. And as things are changing, for example, the updates in legislation or new things from Treasury, we'll be adding content to that website and keep you abreast of all the changes that are occurring. I think with that, we're going to wrap up. Thanks very much for your time. Appreciate you taking time from your lunch to come and listen to a rather groundbreaking change that is happening with the super world, and we look forward to helping you all navigate this. Thank you.